everybody. Just putting up a quick video on some basic concepts of ICT that I use in futures trading. There's many aspects to ICT, but I just use a couple basics, and it seems to work pretty well. So first things first, when you're setting out for your day of trading in the morning, you're going to want to know what the market bias is, which way it's going to be moving for the day. Up, if it's going to be bullish or bearish or sideways. But to determine the bias, I find the easiest way is to look at a daily chart. This is a daily chart of this week. This is Monday this week. And I looked, the previous bar was for Friday, right here. And it opened and closed up. And the Monday bar opened and slightly backed off a little bit, but eventually it started moving up again. So that showed me, along with this rather large trend line here, I could draw of a bullish movement in the market overall. So today I was looking for bullish moves, and I could look at the 1 hour to confirm that. And let's see, let's get a feel for this here. Where would we be at like 9 o'clock on Monday? Monday, 9 o'clock was right here. Came down a little bit, quite a bit actually, and then at 10 it started to iron out and move in a bullish direction. And we can see here at about 11 o'clock there was a break of structure. Now, break of structure usually means that the trend is going to continue in the direction it's going in. And as you can see, it has moved up here. By 1 o'clock, it's up near its high for the day. And that was the bullish move I was expecting to see because of the daily chart analysis of market bias. But we can look more closely at this in a 15-minute chart. We can see here at 9:45 we had a sweep of liquidity, a liquidity sweep. It came down, took out previous lows, and then moved back up. And from here, that's a good sign that the trend is going to, the price action is going to reverse. And this was a downward bearish liquidity sweep. So we would see that in the next couple bars it should start to move up, and it did. And if I draw a just to give you a feel for when you would want to get into some of these trades, if I draw a Fibonacci retracement here, we see this is the bottom, and we're looking for optimal trade entry, which is at 0.618 up down to 0.786. Anywhere at 0.618 or below and up down to 0.786 is the optimal trade entry zone. And we can see that this 10-15 bar moved down about halfway between those values. So it would have been an optimal place to get into your buy order for this particular trade, because we can see it comes up, closes, and the next bar at 10:30 it continues up, and all of the rest of them are continuing up, and they actually invert a fair value gap right here and continue through and up, and we can bring this down, and it just keeps going up from there. That's at like 115, but I only usually trade from 9 to 11 or 11:30. So I would have caught my trade here to maybe here or here. And to give you guys a feel for what's a fair value gap, you may have heard me mentioning it a couple seconds ago about inverting the fair value gap. That's one way it works, but a fair value gap is just this is a bull right here. This green box is a bullish fair value gap. That's because we had 3 bullish candles in a row, with the one in the middle being the largest body, and the wick of the top candle doesn't go below the body here of the middle candle, and the wick of the bottom candle doesn't go above the body here. So the way they measure them is you take the wick of the bottom and the top wick of the bottom and the bottom wick of the top candle, and the area in between those becomes a fair value gap. In this case, since it's bullish, it's a bullish gap. Usually the way you trade fair value gaps is you wait for the price. The price is usually above the gap, and then it comes back and retraces into the gap. You're looking for it to hit about halfway through the gap, and then it could usually reverse and go back up if it's a bullish gap, give you a bullish move off of it. But the halfway mark isn't set in stone. It could go further into the gap, but I usually look at the halfway line in the middle of the gap as a zone where I like to look at. And those are just some terminologies to get acquainted with, and not going to be able to implement it yet, just off this little bit of information to make trades on it and stuff, but we'll be getting into that deeper in the future here. But for this video, I think that's about it. Thanks for watching, and subscribe if you liked it, and if you found it helpful, like the video, and have a good day.